If you're watching the Bitcoin price today, you have a lot to be happy about, and that's because it feels like the bull market is back. And you know why I'm telling you this? Because he's back. Hard Rock Nick is back, and he's saying that the bull market is back. Now, on a much more serious note, much more serious note, you got Bitcoin almost touching 45,000. And this is a different kind of Bitcoin pump. This is not the same kind of Bitcoin pump that we've been seeing over the last couple of weeks and months. This is a completely different type of Bitcoin pump. This is a pump that is supported by a different community with different data, and it's going to spread to different altcoins. So today I'm going to show you what's causing this Bitcoin pump. I'm going to show you all the data. I'm going to show you how to position your portfolios. And I'm going to show you a few more altcoins. And then I've got a mystery guest for you on the show as well. So it's going to be a big show. Let's do this. Let's do this. And I know we said that we should do short intros, but today is just one of those days where we got to get out of bed, bitches. Yo, get out of bed, bitches. Today is a day that you want to be getting out of bed, and that is because, just look at the Bitcoin price. In fact, actually look at my volume. My volume is way tight. Look at that Bitcoin price. We are touching 44,675. And it looks like the bull run is back. Today I'm going to show you why this bull run is a very different type of bull run. Everyone here is saying, Mark is back. Yeah, Mark is back. And that is because today we've got this different type of bull market. Am I echoing? I'm hearing myself echo. I'm hearing myself too loud. I'm hearing myself echoing. Or do I sound normal? Let me know in the comments if it sounds normal or not. Well, I'm going to show you today why this is a different type of bull run. It's being driven by different data sets, different fundamentals, it's not being driven by speculators, which is the type of bull run that we are used to. It's not being driven by short squeeze. It's not being driven by short squeezes. It's a completely different type of bull run, and it's going to be driven by different narratives and different tokens. And today we're going to be talking all about that. So let's not waste any time. Let's get the show today on the road. If you're new to the channel, welcome. Subscribe to our channel. You need to be here. You need to be here in the good times and the bad times, but especially in the good times, because in the good times is when we make the calls. And if you've got your big boy pants on, and if you're willing to take a few risks, then you can make some life-changing money. Anyway, let's get into this. Let's look at the data that I'm looking at and why I say that this is a completely different type of bull market. Well, you know me. I like to look at the fundamentals. I like to look at what's happening. So I look at the charts, and the charts are showing me that Bitcoin is, again, going up to about 45,000. Now, yesterday we had the monthly close. So if you look at Bitcoin on a monthly chart, that is the monthly close. And what you can see is that despite the fact that we had an invasion between in Russia and Ukraine, despite the fact that we had the Canadian crisis, despite the fact that you got the US interest rates going up or potentially going up, after everything, Bitcoin closed up in the month of Feb, and not only did it close up in the month of Feb, but basically what we've got now is you've got a higher low. So you had a level here, and you had this level over here, which kind of makes it a higher low. So it looks like on the monthly time frame, which is the longer time frame, Bitcoin is actually looking extremely bullish. Bitcoin is actually looking extremely bullish, but this candle that you see over here is not driven by institutions. And it's not driven by speculation. This candle is actually driven by something completely different. It's not driven by a short squeeze. It's not driven by a short squeeze, because we saw that in the data. If you look at the short squeeze liquidations or the futures liquidations, what you're seeing here is you're seeing that even though there were some short liquidations, this is not a short squeeze. Because if it was a short squeeze, what you'd see is you'd see this orange bar over here going right up the top. So we know for sure that this is not a short squeeze. This is a different kind of bull run. You see, there were no liquidations, or there were very, very, very few liquidations over the last 24 hours. There were only 74,000 liquidations, which is pretty much the liquidations in a normal day. I want to show you 3 data points that I'm looking at, because when you look at the 3 data points, you'll understand why this is a more exciting bull run. I mean, we should get excited when the price of Bitcoin goes up, and we should get excited when institutions adopt Bitcoin. We should. And we should get excited when speculators buy into Bitcoin and that sends the price up. That's all cool. But this buy is a little bit more exciting, and I'll show you the data that I'm looking at. So the first bit of data that I'm looking at is this spike over here. So if you look at the active addresses with more than 1,000 Bitcoin, and that's the orange line, and you see that yesterday, miraculously or mysteriously, there was a spike in the number of Bitcoins, in the number of accounts that are holding 1,000 Bitcoin or more. Now, we haven't in the history of Bitcoin seen such a spike. We haven't seen a spike where all of a sudden the number of active addresses with over 1,000 Bitcoin increases so much. Then we go to active. People saying turn the mic too loud. Okay, hold on. Let me turn down the volume on the mic. How's that? Hold on. Let's get. How's that? Too loud?
Yeah, that's better.
That should be right. That should be right. Okay, cool. So you saw a spike not only in the number of active addresses with 1,000 Bitcoin or more, but even the number of active addresses with 100 Bitcoin or more shot up yesterday. That was this orange line over here. So you've got number of accounts or addresses with over 1,000 Bitcoin shooting up on one day. On the same day, you've got number of accounts with 100 Bitcoin also shooting up. And then you look at accounts with the balance of 10,000 Bitcoin. There was a little spike in accounts with the balance of 10,000 Bitcoin. Let's also look at balances on addresses with accounts with less than 1 Bitcoin. What you're seeing is that also had a little spike up. That's the one bit of data that I'm looking at. Then I look at another piece of data to validate my assumptions. And the other piece of data that I look at is I take the same chart for Ethereum. So I go to the Ethereum charts and I look for charts for accounts with balances of over 1,000 Ethereum. And what I can see here is that nothing happened yesterday. Nothing happened. And I look at the same with accounts with 10,000 Ethereum, and pretty much nothing happened yesterday. And I look at accounts with over 100 Ethereum, and pretty much nothing happened yesterday. So what we're seeing is a scenario where money is flowing into the market, but the money is not flowing into the crypto market. The money is flowing into Bitcoin, and the money is flowing into Bitcoin pretty aggressively. So if you look here, you can see that the money is actually flowing into Bitcoin very aggressively. I mean, we haven't seen a spike. I can't see in the history of Bitcoin, and this is data that goes all the way back to 2010. There's been one other spike that had some kind of similarity like this. Oh, sorry, this is 2019. But if you go back all the way to 2010, let me see if I can drag that. I don't know if I can drag such a long time to. Anyway, you won't see that kind of data. So what you can see is that this is money coming into Bitcoin, not money coming into crypto. And that is validated when we look at the Bitcoin dominance. So we look at the Bitcoin dominance, and what we've seen in the last day or so is that the Bitcoin dominance has absolutely shot up, which means that the money that's coming into the market right now and the demand is actually demand that's going into Bitcoin and not actually going into altcoins. Or we can say it differently. We can say the money is going into Bitcoin, a lot of money is going into Bitcoin, but it's not yet going into the altcoins. And I'm going to show you in a few seconds when I think that this money is actually going to be getting into the altcoins. But for now, that money is flowing into Bitcoin, and that's sending the Bitcoin dominance up to right now about 44%. So it has been as high as I think 44.2 or 44.1%, but now the Bitcoin dominance continues its uptrend and is going to around 44%. So what's causing this? We saw a huge amount of money going into the Bitcoin network yesterday. We saw 9 billion settled in one block. So if you think about Bitcoin blocks, which are mined every 10 minutes. There was one block yesterday which mined $9 billion worth of adjusted volume. So imagine like one block, one bunch of transactions, which went into which went $9 billion. So this is what's going on with Bitcoin. The money right now is going into Bitcoin. The indicators are showing us the reason why money is going into Bitcoin. And it's not the usual reason why money goes into Bitcoin, because it's not about speculation. It's not about short squeezing. This is a very different kind of spike in Bitcoin. This spike is about adoption. And it's about adoption for exactly the reason that Bitcoin was created for. We're seeing, for the first time, I think, since Bitcoin's creation, we're seeing people fleeing into Bitcoin for exactly the reason why Bitcoin was created for. Bitcoin was created so that people could tap out of existing financial systems. Bitcoin was created so that people couldn't seize each other's assets, so that people could stay out of political games and political shenanigans. And that's exactly what we're seeing right now. Because right now, with this financial warfare that's going on, so you've got this like new kind of warfare that's going on. And this kind of warfare is not a warfare that's being fought with, say, rifles and whatever else. This is a different type of warfare. It's a warfare around finances. And not only the finances of banks and companies and financial institutions and governments, but this kind of warfare actually targets citizens of a country. So what we've seen is that the US has imposed sanctions, and the UK has imposed sanctions, and France has imposed sanctions, and all these sanctions have come. And first, what they did was they went for the institutions and they went for the banks. And they said, look, we're cutting off the banks from the financial system. Then they said, look, we're also taking Russian assets. Then they said, okay, hold on. We're actually freezing the assets of Russian oligarchs. Okay, but who decides whose assets are being frozen? They're making an assumption that ordinary men and women, ordinary people that have made a lot of money, well, all of a sudden, their assets can be frozen. So, and it's not only oligarchs. So on the one hand, it is oligarchs, and the US can, and the allies can just decide that they are confiscating oligarchs' assets, which is why we saw Roman Abramovich, the founder of Chelsea, actually give up Chelsea Football Club and give temporary stewardship of the club to a charitable foundation. And that is because he's a wealthy Russian. Now, we don't know if he was involved with the president. We don't know if he's corrupt, and we're not going to speculate about that. But what we're seeing is that in this new kind of warfare, people are worried, or countries are imposing sanctions, and they are even, I mean, read this, and this is not coming from a poor source. This is coming from a senator from Connecticut. His name is Chris Murphy, and he says, he's a US senator from Connecticut, and he says in a tweet thread, he says, the US and allies are coordinating to not only freeze the assets of Putin and his oligarch allies, but also to seize the assets. Okay, so now what they're doing is they're just starting to seize assets of oligarchs. And what these people are starting to realize is that there are a whole lot of, no matter which asset you have, it doesn't matter what asset you got, it doesn't matter if you've got funds or yachts, or funds in the bank, or yachts, or private jets. Okay, sorry, I know I made a mistake. Roman Abramovich is not the founder of Chelsea. He bought Chelsea. I know that. I'm a big Chelsea fan. So if you've got what these oligarchs are realizing, not only these oligarchs, but also people in these countries are starting to realize that no matter what asset you have, those assets can be confiscated or sanctioned. And it doesn't matter what the asset is. In fact, if you look at the type of assets that any oligarch would be holding, and not even any oligarch, but any individual in the world, you look at the asset list, and you look at the asset list that can be confiscated. You think of like money in the bank, well, that can be confiscated. Yachts, they can be confiscated. Private jets, they can be confiscated. Real estate, easy to confiscate. Shares in companies, easy to confiscate. Physical gold can be confiscated. Diamonds, precious stones can be confiscated. Football clubs can be confiscated. Crypto exchanges can be confiscated. And you work down this asset list and you say to yourself, hold on, if you work all the way down this asset list, what are the assets that cannot be confiscated or sanctioned? I don't know of any. I don't know of any. In fact, the only asset I know that cannot be confiscated is crypto, and specifically crypto that's sitting on cold wallets. So not crypto that's sitting on exchanges. Even if you have a taekwondo black belt. So even if, say, you got a taekwondo black belt, even that can be confiscated. And we saw that poor Putin, he got his taekwondo black belt. He's no longer, even though he is a black belt in taekwondo, his black belt in taekwondo is now gone. He's been stripped of his black belt in taekwondo. Also, poor Putin. So there was a group of hackers. Putin has a yacht. It's $100 million yacht. It's called Graceful. And a group of anonymous hackers figured out a way to mess with the traffic data and made it look like the yacht had crashed into Snake Island. So even your yacht can actually be confiscated. Okay, but on a more serious note, in this new type of warfare, this financial type of warfare, what people try and do, or what countries are trying to do, is they're trying to suffocate Russia's economy and suffocate the Russian people's economy. And the Russian people are starting to suffer. Okay, so what you're seeing is the Russian people are really starting to suffer. These are images of Google and Apple Pay cards no longer working on the Russian metro system. And so you can see that they're pretty much paralyzed. And at the same time, Visa and MasterCard have also terminated all of this. And Bill Ackman said it last week. He actually said last week, and he's an American billionaire. And if you look at this tweet from the 26th of February, which was last week, he says, I wouldn't want to keep money in a bank that can't access a SWIFT system. Once a bank can't transfer or receive funds from other banks, its solvency can be at risk. If I were Russian, I'd take my money out of the banks and I'd start taking that money now. And that's exactly what's happening. What's happening now is that there's all this talk of sanctions, and the Russians are running to the banks and they're trying to withdraw their money from the banks. And that's exactly what's happening. So it's this new type of financial warfare, and it's all about sanctioning. But it's a double-edged sword. So if you think about this double-edged sword, on the one hand, you want to impose sanctions against Russia. But on the other hand, you've got to be very careful if you impose sanctions against Russia, because all these European countries that want to impose sanctions against Russia actually have a lot to lose. So if you look at the banks and the countries that are sanctioning Russia, France, Italy, Austria, they all have a lot to lose. Right now, banks' exposure to Russia, and you can see that France has the biggest exposure to Russia. Italy has the second biggest exposure to Russia. And if you look at the total trade exposure to Russia, so China has the most to lose if the Russian economy tanks. But then you've got other countries like Germany, like Netherlands, like United States, which on the one hand, they want to sanction Russia, but on the other hand, Russia is super, super, super important to their trade. So it's this tightrope of trying to cripple Russia, but they've got to be super careful, because if they do cripple Russia, they've got to be careful that they don't actually suffocate their own economy. So if Russia can't pay its debts, all of a sudden, you may start seeing the French economy go down or the Italian economy go down. And so this is a big thing. This is a massive thing. What you can see is that the dependence on the dollar we're starting to drop our dependence on the dollar. The world's starting to drop the dependence on the dollar. And you can see if you follow the dollar share of Russia-China trade settlements, they are proactively trying to break away from using the US dollar. So it's a new type of warfare. And in this new type of warfare, it's a financial warfare. And in this financial warfare, the countries are starting to sanction the residents of a country. You may not even live in Russia. You may just be Russian and living in the UK and have business interests, and they could deem you to be an oligarch, and then they're going to confiscate your assets. And so that, plus the fact that all of a sudden the ruble's gone to a ball of shit and the ruble's not actually worth anything anymore, and you add that to the fact that the banks, there's a bank run at the moment and banks aren't giving people money, and what you're seeing right now is you're seeing a premium to buy Bitcoin on Russian exchanges. Now, yesterday, the premium was at about 100%. I see today it's come down a little bit, and people are willing to pay $20,000 more per Bitcoin. So imagine that. Imagine that all of a sudden, you're going to pay $20,000 more per Bitcoin. And you know why this happened? Is because instead of buying Bitcoin and tapping out of the financial system when these people actually had the chance, what they did was they waited. And they waited for chaos. So it's a big difference as to whether you want to get yourself out of the system now and then use the system's money when you need to use the system, or if you want to wait for something to go wrong. But the problem is when something goes wrong, you may land up having to buy Bitcoin at a huge thing. Now, this is great. So all this is good. It's amazing. I hate the fact that there's a war. But for Bitcoin, all in all, this is good. And it's pushing the price up. And we're at 44,000. And this price going up is creating huge FOMO, massive FOMO. You can see the FOMO if you look at the funding rates. So let me quickly find you guys the funding rates. If you look at the Bitcoin funding rates and you look at the perpetual funding rates, what you can see is that people are now in FOMO mode. And they're willing to pay premiums to borrow money so that they can take leverage on Bitcoin. So all of a sudden, there's this huge demand for money. And you can see that when there's a huge demand for money, the funding rates go up. So it's creating this huge FOMO. So that's on the one side, it's a good part because that FOMO is going to get people to leverage in and FOMO into Bitcoin and keep pushing the price up. On the other side, or on the same side, you've got the institutions. And the institutions are also now looking at Bitcoin and going, hold on a second, do we actually have enough exposure to this asset given what's going on in the world? And I think Nayib Bukele, the president of El Salvador, I think he said it best. He said, the intrinsic value of Bitcoin is now in full display on the whole world. Okay. And I saw another tweet, which was also just as good. He said, what's going on is there's a Russian bank run, there's a Ukrainian bank run, there's a Canadian bank run, the oligarchs are buying, there's inflation, and everyone's smart enough to see what's going on. So it's like this perfect storm. And this perfect storm has caused Bitcoin to completely decouple from the NASDAQ. So it's no longer being treated as a growth asset. NASDAQ is going down. Bitcoin now starting to go up again. So completely decoupled from the NASDAQ. And then you've got Bitcoin decoupling from gold as well. So all of a sudden, gold went down yesterday and Bitcoin went up again. So Bitcoin is now completely starting to trade as its own asset. All of the above, fantastic. There is one negative around all of this. The one negative around everything that we've spoken about now is that if oligarchs are using Bitcoin to avoid US sanctions, if this candle over here was caused by oligarchs trying to get Bitcoin, and there's another chart here which I'll show you in a second, where they bought the Bitcoin and they took the Bitcoin off the exchanges. So if oligarchs are using Bitcoin, buying Bitcoin as quickly as they can before they get banned on exchanges, because remember, they're not banned on most crypto exchanges, they are doing this to buy this as quickly as possible so that they can avoid the sanctions that are coming on Russia. And so they're probably doing it, to avoid the sanctions that are coming onto Russia. And the problem with that is that we are already seeing that Joe Biden and the Joe Biden administration is asking exchanges, I saw a tweet, so Biden admin asking exchanges to block Russian individuals and organizations from using Bitcoin. That's the bad part of this all. So the bad part of this all is that if all of this is happening, then what we could face is an assault from the regulators. If these oligarchs and other war-related purchasing doesn't stop, or if people think that they are there to avoid the sanctions, then we're going to have a big problem, because we can already see that the Biden administration is asking Bitcoin and crypto exchanges to limit Russia trading. Binance saying that would go against their founding principles and the founding principles of crypto. And I know that Binance may put up this big strong front and that they can do this, but ultimately, if it comes down to blocking Russian activity or losing their license to operate in the United States, I'll tell you what's going to happen. They're going to go for blocking Russian activity. And so the big moral of the story here is that what you want to be doing is you want to be buying Bitcoin, but the most important thing is that you want to be buying Bitcoin and you want to be taking the Bitcoin immediately off exchanges and keeping it in cold wallets, because Bitcoin on exchanges is probably at some point just like having money in the banks, and you don't want to have your money in the banks, because what you've seen is that this is when it's all happening. This is where all the sanctions are happening. Is they're blocking all the banks, and I think now we're kind of seeing what we're seeing now is we're seeing a separation of the people that have real conviction and the people that are just tourists in the game. So I love this tweet here from TED Talks Macro. It says, by the time the move is confirmed, it's usually too late and you've missed the majority of it. And that's exactly what's happening. A lot of people didn't have conviction to start buying into Bitcoin when the price was at 32 and 33 and 34 and 35 and 36,000. We said to you guys at the time, it feels like everything's out there. It feels like you should be buying. It feels like the risk-return trade-off is done. But a lot of people never bought it because there are a lot of people that only have conviction in the price of Bitcoin when the price goes up. And they lose conviction in the price of Bitcoin when the price goes down. Now, you got to make sure that you don't fall into those kind of people, because if you do, then effectively you are the tourist that I've been warning everybody about. You are the tourist that comes in over here when you're getting in when the price goes up. So you got to test your conviction, and that conviction is not only about Bitcoin. It's not only about Bitcoin. It's about Bitcoin and altcoins. Your girlfriend told you to sell at 37,000. That's she doesn't have conviction. And then, as I said, Elizabeth Warren, cryptocurrencies are undermining sanctions against Russia, allowing Putin and his cronies to evade economic pain. The US financial regulators need to take serious action and increase their scrutiny of digital assets. You see, so this is the problem. This is the one downside of having the price go up because the oligarchs are buying. All right, so that's that. I don't know. Suzu's not the guest. The guest is Vinny Lingham. And the reason why I thought I had to get Vinny Lingham on the show is a very simple reason. There was a podcast last week. The podcast was, I think, on Thursday or Friday. It was posted on the 25th. And on this podcast, Vinny Lingham was talking to Sandeep. And on the podcast, someone summarized the podcast, and he said, to conclude what Vinny Lingham predicted, he said, Bitcoin at 42,000 to 45,000 by Monday. And if Bitcoin reaches 46,000, then it's the start of a bull run. So let's buy some Bitcoin. That was the summary of it. At the time I read this and I thought to myself, wow, that's quite strange, because Vinny's not like the ultra bull. He's not the kind of guy to stick his neck out on a Friday and say, Bitcoin's trading at 38,500 on a Friday. He's not the kind of guy to come out and say, okay, well, on Monday, Bitcoin's going to trade at 40, 40, 46. I mean, he's been around the block many more times than me, and he's much more experienced in making such a bold price prediction. So when I saw this, I thought to myself, why is Vinny so confident? That's what I thought on the one side. On the other side of it, I thought to myself, Vinny's such a dumbass, because what he's actually done now is basically committed Twitter suicide, because you should know after being on Twitter for so long that you never post that kind of price prediction, because you're basically going to get destroyed by the Twitter mob. You're going to get this whole Twitter mob of, yeah, you're dreaming. But it turns out that Vinny was right. It turns out that after all of that, he was right. And so what I thought I wanted to do was I wanted to get him on and ask him basically, how the hell did you have such conviction that by Monday, I mean, you missed it by day. You did. You missed it by day. I've got to be blunt with you. You missed it by day.
No, I didn't.
You missed it. It was Tuesday. The price went to 42,000.
It was Monday in California, dude.
Okay, it was Monday in California. Okay, it was Monday in California. Okay, mate. I'll give you that. Why were you so confident?
So look, I mean, I've got a very weird brain, and Sunny and I have spoken about this before on our podcast. Like, I absorb a lot of information on a daily basis from a lot of sources, people, chat rooms, Twitter, whatever, and I obviously look at some of the charts and see what the price action looks like. And what struck me is a lot of the people I do follow on Twitter. So I have a couple of people I follow where I actually respect their views. They're excellent technical chartists. The problem with technical chartists is this: it's basically driving while you're looking in the rearview mirror. So you're trying to predict future based upon the past. And all the bots, all the R bots, everything that's running in the crypto networks globally is based on historical data. And what we saw from Russia last week was unprecedented action. Okay. What we saw from the US and everyone else retaliating was unprecedented action. So how do you teach a bot what has just gone on and what that means and what sanctions means? There's no precedence for like the sort of global sanctions. And that's the first thing. The second thing is money networks, right? So money still needs to flow into Russia in some way. People have to pay for goods and services, pay employees, get money out of the country. Russia's one country being affected. The other country is Ukraine. If you're in Ukraine and the banks are closed, you can't get your money out. What do? How do you move your wealth out? And so, and then the third thing is exchanges. There's money sitting on these exchanges. People in Ukraine, people in Russia are now basically trapped by the banking system. They've got to move their money out of the exchanges. And so I've always had a theory that a lot of exchanges are running fractional reserves on Bitcoin. They use perps and other ways to hedge it, but they don't actually hold the Bitcoin. And so when people need to take the Bitcoin off the exchange, they basically buy it in real time. They settle the perp, whatever they're doing to hedge. And and I think this is how exchanges trade. They use your coins to trade the Bitcoin price and come up with some very interesting hedging mechanisms. So the confluence of those three things, Ryan, and going into a weekend where the banking system is shut down and it was going to get worse. I figured by Monday, and I was very specific. I said Monday.
You said Monday, which is, it's basically social suicide.
Yes, and I said Monday because Monday is the day the banks open and all the fiat starts flowing into exchanges, wires start leaving Russia or whatever it is. And remember, it's not just money in Russia; it's Russian citizens' money in banks around the world. So all that money is like, look, we everything. There's KYC in the financial system. If I'm a Russian citizen, I've got money in any country in the world, I'm taking it out of that country and I'm putting it into Bitcoin because I'm more willing to take a 30% drop in the price of Bitcoin, which is would be a huge drop from these levels. I'd rather take that risk than the risk of 100% of the money being frozen. And that's basically, if you look at the size of Ukraine, the size of Russia, and the amount of money we're talking about, a couple of $1 billion will move the dial, and that's just one oligarch. So, you are right about early on about the KYC, AML stuff coming in pretty aggressively. If we start seeing more Russian money moving, and Binance is saying they don't want to, cut off Russian accounts, that's going to happen. But between now and then, there's going to be a run, and so
which means that there's going to be because the oligarchs are smart enough to work out that their on-ramps and off-ramps are about to close. They're pretty much in this rush now to buy as much Bitcoin as they can and get it out of exchanges as quickly as possible and get onto cold wallets as quickly as possible so that this is a very short window. Because when the exchanges are faced with a choice of complying with an executive order from a president or holding up their posture, they're going to comply because they're not going to lose their entire US business or the entire European business because of it.
Correct.
The other concern that I have is that it's clear that these Russian oligarchs are doing this to avoid sanctions. It's clear.
Yes, absolutely.
It's clear. Now, whether that's right or wrong and whether they should have been sanctioned in the first place.
That's one side of the coin, okay? It's the Russian oligarchs. Some of these guys aren't even residents in Russia anymore.
Exactly.
So and to some extent, we're unfairly targeting citizens of a country that have left the country. If they've left for genuine reasons and whatever else, then that's fine. Like I'm an expat South African. I live in the US. I'm a dual citizen. If South Africa does something stupid, should I get penalized for it? I'm not sure I should, but so I have a little sympathy with people who have left the country, but people who are there actively in voting and supporting the regime, like. But
Vinny, that's not with respect, that's not a fair statement. And I'll tell you why. I live in South Africa right now, let's just say. And if the South African government does something that the rest of the world doesn't like, and I'm not in favor of it or I'm not complicit in it, effectively what would have happened now is they would have cut off my credit cards. I wouldn't have been able to spend money offshore. They would have banned my bank account.
But
and so
if you're a dual citizen, do you get affected by in other words, if you've immigrated, you're living in another country and another citizenship, should you get affected?
Well, it's been basically any Russian holding any Russian bank account. It's ex-Russians who are Russian passport holders, which, if you don't denounce your passport, you're still a Russian passport holder. And if you're an oligarch or a very wealthy Russian who's living in the UK and has businesses in the UK, you're now at risk that those business accounts are frozen. That's this financial warfare of sucking. That what they're trying to do is basically put so much financial pressure that even the oligarchs, it's a combination of oligarchs and the people who are standing there not being able to use their Apple Pay to buy bread or their Google Pay to buy bread or their Visa and MasterCard, and all getting them to rebel against the government and saying our life is so bad since you started this war, basically end this war. Now, next question. This Bitcoin run is very much a Bitcoin run. Yes, there are some altcoins which are firing. But if you look at the dominance is back up at 44. That green candle is the dominance candle. Then you've got, I can show you 101 metrics. Let's not get into the metrics. Does this flow into altcoins? And if so, when does it flow into altcoins? And if it does flow into altcoins and we can determine when, then what altcoins is it going to flow into? Because that's what the DGens want.
Okay, so let's talk about the altcoin run. The first thing I'm going to be looking for is the Bitcoin dominance going above 50%. And the Bitcoin dominance going above 50%. And then
I just choked on my water.
No, there's a reason for this. I think there's a lot of PTSD over this last run, and I think that people are still nervous and a little shaky. Now, also going to move. Don't relax, everyone. You're going to see some movement there, but it's not going to be as dramatic as Bitcoin because the fiat flow is fiat into Bitcoin right now, and the people who are going to be buying alts are not the people putting the money into Bitcoin. Okay.
Exactly.
So if you're a Ukrainian, and I'm going to use Ukrainian because I think it's just a legitimate example where you're not an oligarch trying to like embezzle money or get money out of Russia. If you're a Ukrainian and you're trying to leave the country and flee, and you want to get your money into Bitcoin, you aren't going to try and speculate on Ethereum or Solana or any other
exactly
coin. You are going to go into the safest, hardest asset in the crypto ecosystem. And then you're going to move your money overseas, and you're going to keep it in that until you get a bank account somewhere else or whatever the case is. And that's how you're going to do it. What this also means, though, is that
just one thing before we go into it. So you can see that clearly in the chart. So the Bitcoin chart shot up. Addresses over 1,000 Bitcoin, which means real rich addresses. Ethereum did nothing. Ethereum basically, it's like they didn't even put 1 cent into Ethereum. Basically, no new Ethereum accounts.
That's not the flow. That's not the fiat flow. People who are first timers in crypto, who are using crypto to escape, a war or authoritarian regime, you're not going into altcoins. You're going into Bitcoin. Now, let's just play this out for a little bit. Why are altcoins going to run? Well, let's talk about this. Most people in crypto, their portfolios, Bitcoin is a top 5 or top 10 asset at least, if not number 1 or 2, right? So what happens when you see your Bitcoin holdings go up and Bitcoin hits 50 or 60K and the dominance is above 50? Well, you want to diversify a bit because not everyone is comfortable with Bitcoin being 70% of their portfolio or whatever it is. And so the altcoin run doesn't come from new entrants into the market. The altcoin run comes from existing entrants to the market, diversifying their portfolio and reallocating their assets based upon where they think they'll get better leverage with their money. And so
I agree.
You have to be patient and you have to wait for this leg of the Bitcoin run to be over. And I don't think it's over anytime soon. I think we've got a couple of weeks here where there's a breakout above 50, 55K. And then when we get about 50%, then you can start seeing a rebalancing slowly. But I don't think anyone is selling their Bitcoin on their portfolio right now.
So I think what you said is very smart. I think the money is going into Bitcoin. The money that's coming into Bitcoin right now, that's money that's not going to go into alts, not now and not ever, because these are people that are really using Bitcoin for what it was designed for, which is why this bull run is slightly different. We've never seen a bull run where people adopt Bitcoin because of what it was designed for. It's the first time in the history of Bitcoin that we've seen that, which is people adopting Bitcoin for what it was designed for. However, you do have a contingent of crypto people, and those crypto people, like you say, are holding Bitcoin. And when their Bitcoin gets to a certain price, what they're going to start doing is they're going to start taking their money out of Bitcoin, and it's going to start flowing into the alts. And so we could get the dominance rising a little bit. I don't think it's going to go to 50%, like you said. I think it's probably going to go, I think 45, 46 for me is the highest that it goes. I don't even think it gets there, but let's say that's the highest that it goes. And then money starts to flow into alts. Now, we are seeing something very interesting in alts. So the type of altcoins that are moving are altcoins like, for example, Luna. So Luna is up almost at $100. Okay, why is Luna up almost at $100? Because they also don't want to be in USDT and USDC. The reason why the oligarchs probably wouldn't want to be in USDT and USDC is because they're centralized. And if push came to shove, and Bitfinex or Jeremy Allaire's circle got a subpoena from the Russian to block Russian accounts, they could. But UST doesn't have that. And oligarchs will also probably work out pretty soon that they can take those UST and that those UST can live on Anchor and earn 20%. So eventually that's how smart these people are going to become, because they're not going to be holding USDT. They could never do that. So it's going to be Bitcoin and maybe a very decentralized stablecoin.
It's possible. I do think that the moment you start touching any synthetic version of US dollars, and the real question is, where do these dollars get used? Like, who's going to accept them? And because these are so crypto can be tainted, right? So if you're Coinbase and all these other big, the regular entities, they're watching the inputs and the outputs, and they're looking where it's coming from. And if it's like, this is a Russian wallet, they're going to just block the wallet regardless. And now the Russian, so here's the problem, Ron. I mean, you'll see in Russia right now, the price of Bitcoin is actually above the market price because the demand is so high.
It was 100% above the market price yesterday. The latest report or the latest tweet that I saw is about $20,000. But you're talking about peer-to-peer trading, so it's very tainted because peer-to-peer trading, you actually don't have all the data.
So what happens when you have tainted coins is that they're worth less because you can't move them through regulated exchanges, etc. So this is the problem. Like, I don't think it's as simple as saying, look, I think Bitcoin is probably the safest mechanism. But in the regulated world, if people start identifying wallets as being Russian-owned and they start publishing blacklists and tainted lists, it is a problem, right? The base coins really are the ones that are offline, the ones that are mined from the Coinbase, that there's no history on them, there was no financial transaction. So Bitcoin mining is probably the cleanest way of, getting coins of no taint. You also have the Casasious coins. You remember those? Those are trading at massive premiums right now.
Because they're not tainted.
Because they're not tainted. So Casasious coins are the coins that came out 2010, 11, 12. Basically, it's like physical Bitcoins, the keys on the coin. And these things are trading at 300% the face value. So it's $150,000 for a Bitcoin, fully untainted, and you just move the key around without actually doing on-chain transactions. They're illegal. You can't produce them anymore in the US. The Secret Service shut them down. But there was an initial run of 3,500 these coins that got out there, and I mean, I've seen them go for a huge. And
I've seen that. They've still got all the forks in them. Vinny, before I let you go, and I've really got about 1 minute. Where to from here? So we're at 44,000 or 45. Let me look at the latest numbers. 43,931. Where does this thing go? Does it go over your 46,000 and we're back in bull territory, or is this just a panic? And then when the panic's finished, everyone just goes back to normal.
No, I think this is a secular shift. So what you're going to find now is it goes sideways for the next couple of days, maybe into the weekend. Obviously, this is a very, very hot developing story. Like, we don't know what's going to go on every day. There's a missile just hit Freedom Square earlier on today. So we don't know how this plays out. My guess is you see consolidation below 46 and you see breakout above 46, which is what I said last week. And I think we're in that range right now where it's going to consolidate. The one thing I will look for is a banking liquidity crisis, where the Fed or someone has to step up and provide liquidity to banks. And the reason is you have a world where up until a few days ago, Russian banks and bank guarantees and money was actually fine. We expected them to pay their debts when they were due, and the banks we don't know what the exposure looks like to Russian banks right now and to all these funds being frozen. We're talking about trillions of dollars that have been frozen worldwide.
I showed that earlier that the trading partners like France and Germany and China and Austria, all of a sudden, they've got debts that they're not going to get back from Russia, and they can't be trading with Russia, and they may even be blocked off from Russia. So I guess that's a big thing, and I mean that's a big wobble in the economy.
That's the start of the breakout. The moment we start seeing the reports and then the government's having to deal with the banking crisis, Bitcoin is going to blow through 46K and probably not even stop at 50 and keep going, because this is what Satoshi wrote about, right?
This is exactly what Satoshi wrote about. That's why I'm saying it's so exciting for me, because this is the first Bitcoin rally. The first, and I've been here since 2015. This is the first Bitcoin rally that I've seen where Bitcoin is being adopted for exactly what it was created for. It's the first time. Everything else has been speculation, but today was a turning point.
And don't forget, this is one of the best narratives for Bitcoin. So even if it was a hollow narrative, okay, but Bitcoin needs narratives to run. And you couldn't ask for a better narrative than this. And so, and narratives are important because it helps average ordinary people understand why people want a certain asset. And so this narrative is actually a very strong narrative. And the other thing is, the last point I'll make is, it's really easy to enact sanctions relative to removing them. So
Got
it's
it.
very easy for governments of the world to slap down sanctions on Russia. But when they want to remove it, it's like, well, what are you going to give me? Let's go to the negotiation table. Let's sit around a room and discuss it. Blah, blah, blah. It takes probably 5 to 10 times longer minimum to remove sanctions that have been placed than to put them in the first place.
Wow. So this is not going to be a short-term thing. This is a long-term thing. This is, you're saying that the US is not going to wake up tomorrow and say, okay, Russia, you've left. We're now reenacting everything. They're going to say, pay reparations to the people, do this, do that. So it's exactly that.
You know, I mean, Ryan, you know politics as well as I do. You really think that everyone's going to sit back down now and all the politicians and get around a room, kumbaya, and in 30 minutes the sanctions are lifted?
No chance, buddy. Vinny, it's so good to have you back, buddy. So good to have you back. So good to see you, brother. Thank you so much. I know it's early in the morning for you. Thank you, buddy.
Cheers, man.
He's a man. Look, the man called it. The man called it. Say what you want. Say what you want. I mean, the man did call it. All righty, let's see what's going on the gaming show tonight. Mr. Hustle.
What's going on, Rand? Great show. Yeah, we got a lot to dive into. Market's looking all right, and you know we'll kind of look at some of the projects that we talked about on the gaming and metaverse portfolio. Kind of some key things going on within those projects, because like you said, alts aren't really running yet, and I think there's a lot of opportunity. Right, I think there's a lot of opportunity. So we'll discuss some of the hotter gaming coins as well. We'll look at some on-chain metrics that suggest that some of these hot play to earn games are actually still on the way up and not on the way down. So I'm excited for today's show.
Sounds insane, but I have a dinner tonight, but maybe I'll cancel the dinner tonight.
No, don't cancel your dinner. You can catch it on 1.5 speed afterwards.
But it's not the same as live. You know what? Watching your shows, you got to watch it live. You got to watch it live. All right, buddy. We'll see you later. Also, guys, listen. If you missed Hustle show, he did an amazing, not Hustle show, Miles' show earlier. So he did an amazing show earlier. He spoke about a lunar price prediction. Okay, now, I mean, I think the word's mind blowing. It was mind blowing. And I think he might actually even be right. That's the thing. I think he might actually be right. The guy might actually be right. So I don't know. Go and try and catch that one. I'll see you guys again tomorrow. Until then, stay safe, trade well, have fun, my friends.